All right, good morning, everybody. I'm starting just a little early here. You can jump over and look at the website. I don't do this enough, where we talk about what we have at the website. So when I started working at the Bullish Bears, they had first asked if I would do blog posts, and write articles, do blogs. And yeah, I mean that was a lot of fun. I enjoyed doing that, and slowly they asked if I wanted to do some videos. So I started working on, um, we didn't have, this thing called courses back then. We didn't have this thing called Next Level Library. I just started putting videos together, really focusing on what I had looked for as a newer trader and couldn't find. I wanted to make that kind of content so that when people followed behind me, new traders looking for, education on particular subjects, that they would have something that could point them in the right direction. And these videos that I'm talking about, they were not just videos on, you know, a, this is a call and this is a put. I really didn't want to do those kind of basics. I really feel like there's been enough of that out there. There are hundreds and hundreds and hundreds of videos about, the introduction to options and what a call and a put is, and the construction of a credit spread or a debit, right? One in the money, one out of the money, or both out of the money. Tons of videos out there on that. What I wanted to do was bring strategies to the table, and these videos, even in the hedges, they're videos with specific strategies, like the VVS spread, the VIX volatility spread, or something like that. Not just some basic hedge, right? Anything can be a hedge. We started getting into actual strategies when I was running these Saturday classes where we would meet up in the Bullish Bears Discord on Saturday morning, and we'd go through this PDF book that I had been writing on, and we would review, um, yeah, various strategies. Really, these were in depth. It was called like the advanced options class. We'd go in and go through the book, answer questions. We had these trend line breakover strategy, uh, 0 day trades, which I really enjoy doing those. When it comes to day trading options, nothing makes me more money day trading options than a 0 day trade. Those weekly expected move trades work really nice for the mechanicals. So there really is a lot here in the next level library. How much of it you would be able to grasp, though, comes from understanding, the basics. And I don't know why there's such a shaming, or a dodge. People, as soon as you say basic, they just kind of turn away and say, "No, oh, I don't want the basics, give me the advanced stuff." Well, if you've never gone through the basics, you'll never be able to understand the advanced stuff, right? So I don't know. Good morning, everybody. I'm gonna see what we can do here. Still got 2 minutes. That went a little quicker than I thought it would. Another thing, mentioning YouTube all the time. The Bullish Bears has a vast amount of videos, years of videos on the Bullish Bears YouTube page. And they also have a blog post, right? Like I mentioned at the beginning, when they first hired me, that's what I was doing, is writing blogs. And these blog posts cover, you know, uh, product reviews of, like Trade Ideas, TrendSpider, different brokers, broker reviews, introductory material, and even some advanced material. I've shared indicators in these blogs, the the market cumulative tick study, um, an on balance volume study with a built-in divergence signal, a MACD, Let's see what we shared, the Shonday indicator with the divergence built in. Just all kinds of indicators and really great material. So, the website, it's continuing to get updates, and it's worth coming over checking out. And for a free trial, I mean, what's the worst that's going to happen? It's a free trial. We also have a great community hanging out in the Discord, chatting and talking and getting help from other traders. And I got to start the Zoom now. Just a moment. All right. Good morning, everybody. I was just sitting here chit chatting on the YouTube. Sound like an old on that YouTube thing. It's been a really quiet night. Not a whole lot going on over there. Asia had a little weakness in its real estate, but other than that, I mean, not too bad, right? Kind of looking at the global markets, it's just really quiet, and I'm almost positive that you guys can't read this small print, but I just jumped over here to take a peek of what's going on, right? You gotta you gotta be able to look somewhere for just a real quick, broad outline of what happened in the overnight hours. If something really bad had happened, it would be all over the news. If there was, a serious situation developing, it would be in the news. All right, as we do every morning, we want to first start with the market watch, asking the questions: Are there any events today that I should be aware of, and when are those events, so that I can perhaps avoid them and/or not get caught up in change situations? 8:30, 10 o'clock, 10:30, 11:30, and 1 o'clock. Those are additional auctions, and additional auctions can wreck a market. They are subtle. They are often hardly even discussed in the news. They just pass by like it's a regular thing. And yet, watching the clock tick over to 1 o'clock and then just seeing an explosive move, or the 11:30. I can't tell you how many times I've seen SPY turn on a dime right at 11:30, right when this auction comes out, and everybody's saying, "Whoa, what happened? What was that? There's no news. What happened? Why'd the market move like that?" Oh, there was an auction there. You didn't watch my morning briefing. You don't need my morning briefing to point you in this direction, though. It's on the calendar, right? You got Market Watch calendar. If yours looks like this and it's just full of all kinds of things, click the show all and turn everything off, and then just turn on the Econo Day event. We do have the petroleum status report at 10:30. This can often be a play in USO. So, just set yourself a little reminder um, that you could have a trade play. Give myself 15 minutes. A lot of times there's nothing there, right? We're watching USO. 10:30 comes around, nothing happens. No big deal. But um, we crested $80 a barrel. Um, Costs are going up. This status report may offer some input. It's worth being ready for an opportunity if we happen to see USO making a move, right? That would be the play. Oftentimes, if USO moves, so does US steel, right? So kind of pick your steel industry. I like X steel, but there's a lot of steel names out there. Um, Energy and oil and steel are tightly correlated markets. Generally speaking, I'm not talking charts now, right? I'm talking about 20 years experience working in the oil field and 10 years experience working in a steel industry. They're tied together. Yeah, I'm old. All right, so we have a topping pattern in the ES. Now, yesterday I had talked about distance from the moving average, right? And I talked about how when we get too far away from a moving average, we very often pause and consolidate and or reverse while we're waiting for the market to get caught up with its moving average. So on the ES, right around that 2% area, two and a quarter, it's about as far as it likes to go from the 10 period moving average. When it gets there, it often pauses, it consolidates, it takes a breather, and or it reverses and comes back down. Well, you can see we didn't reverse, right? We had a doji day yesterday. Um, we very likely could have another doji day today. If we look back here, and I know I'm really zoomed in, and it's a little hard to grasp what's going on when I'm that zoomed in. We had a doji day after an explosive move to the upside, doji day, down day, up day, down day. Look at all that consolidation, right? And a lot of inside days here. Even though, I mean, yeah, technically we wicked it down or we wicked up outside of the range, but we were just really tightly consolidated after making a big move, right? Kind of an exhaustion or topping or a basing or, you know, depending on which direction we're coming from. So just a very large move after this tightening down here where we had higher lows, you know, equal highs, compression, breakout, consolidation. So we're out of all of that, right? We're above the trash. We've made it out of the box, but we made the move very fast. And it's very likely that the market just needed a breather, taking a break, catching his breath. Then we're going to continue with that move. For anybody who's seen those Busby videos, then you'll know exactly what I'm going to say here. We've got the potential for a Busby, right? When you have a range and then you break out of that range, you very often see price come back and validate against the old resistance as a new support. It's a very, very common thing, right? We break out, come back, and we retest the old resistance as new support. Well, that is a Busby. And the target for that Busby is back up to where we came from. But a Busby often signals the beginning of a trend that we do not yet have, right? And it's very important to be able to say that. A, a Busby is the start of a trend that has not yet even started, right? We don't have it yet. But if you go back and look at where there was a Busby and then a breakout and then a trend, or go look at trends, they very often started with a range bound market that broke out of that range, pulled back and validated, and then began to run a Busby. If you search the Bullish Bears YouTube page, you will find Busby. So you could just be on YouTube and type in Bullish Bears Busby on the search grid in YouTube. I made a short little video on it. So we have consolidated. We spent yesterday sideways, kind of just maintaining, and I was impressed that it did maintain, right? It didn't just dump and crash back down. It held the level, and yet again this morning we're still holding the level. Now this is beginning to look a lot like a topping pattern, right? But there's this old adage that market tops are very fast events. and that market bottoms are, you know, kind of this elongated situation that seems to last for a while. I'm sure there's plenty of authors out there that say that way better than I just said it, but if whether or not I say it in the popular phrase doesn't matter. It's what I'm saying. If this was a topping pattern, it would very likely have already toppled and turned back over, right? The fact that we're still maintaining that range leads me to believe that there's still a lot of exuberance here. There's still a lot of opportunity for an upside move. And as I named the title of this, still waiting on a catalyst, right? Everybody, all the institutions are hedged up to their eyeballs. They're not going to sell anything because they're insured. They don't need to sell anything. If the market was to crash and burn, they're all hedged up. They're going to make money. They'll make money hand over fist if we fall. So they're not going to get out because of that. When Corona hit, they were not hedged like they are now. They were greatly exposed and they got whacked really bad. And they had to sell because they were getting margin calls. And then people were running redemptions on everything, right? As utilities got whacked, gold got whacked, everything got whacked. Well, nobody's selling here because they're all hedged to their eyeballs. So if they're not selling and they're not buying, we've got a lack of participation, then we're just kind of holding this level. We're all waiting on this Santa Claus rally, but it seemed to have started early and we had a serious monster rally. It's got to take a breather, but it's not done yet. Right. So don't let those bobbing heads on TV convince you that you should go short or that, that there's all that fear out there. There's always reasons to be cautious and concerned. I'm certainly not saying that you should throw caution to the wind, but that was a very large run. It makes perfect sense that we take a breather here and just pause for a moment, right? So if we should see another sideways day, it's not a bad thing. We could even see a pullback like that Busby, and it would actually be confirming my bullish bias if we pulled back, right? That would confirm my suspicions of this bullish bias if we get that pullback. It's exactly what I would expect to see. Um, Mr. Grimes wrote a book, and in that book, he talked about breakouts and entering on the first pullback following a breakout. Now, rather than saying that entire sentence, entering on first breakout, pullback, blah, blah, just call it a Busby. Short, simple, sweet. We had resistance, broke to that resistance, price pulled back. It does that a lot on all time frames. On all time frames, you see that. So that's what we're expecting, right? It's what I'm expecting, a pullback. Now, that pullback fits the logic of buy low, sell high, trend trade 101. This was a lot of momentum. And when you get a momentum breakout, like back here, you very often don't see that pullback, right? We set a high, we pulled back, we had a little bit of a breakout from that high. We had such bullish exuberance. It was a momentum play. There was no pullback. That happens a lot to intraday traders waiting for a pullback because they're taught, oh, don't chase, don't buy at the highs, don't, no, no, no. And yet in momentum, that's what you do, buy high, sell higher. That's what you're supposed to do, right? If that actually had pulled back, we'd be concerned because momentum shouldn't pull back. So this, since it paused in this consolidation, very likely does not fit that bill, right? It's very likely we're going to see that pullback. So for today's trading, it is very likely to be another day just like yesterday. I call that trash. I'm not saying it's not tradable. Heck, I traded yesterday. I'm saying it's difficult to trade, especially when you have very large, extreme candles and random reversals and massive wicks. I don't need to trade that. You don't need to trade that. And when you try to trade that and you struggle and suffer and say, "Ah, man, trading's hard." Well, quit trying to trade the hard stuff. Trade the easy stuff. Sit out or change markets. Trade something else. Don't try to trade that. As long as we're in this range, it's very likely to remain nasty like that. You can make the range a little bit bigger to encompass yesterday's price action. And you can say, well, as long as we're inside of this, then it's very likely going to be choppy, nasty, difficult to trade. If you find that you're losing more than you win and that trading is difficult, try the easy stuff and see what you think about trading at that point. Make a blanket statement that says, if we are inside of this range, then I'm not going to trade. And that range could be whatever range you choose, right? It could be this, it could be the bigger one, whichever one you choose. Making a blanket statement like that will stop you from getting chewed up until you recognize a better opportunity to trade, right? Something that looks like that, as opposed to something that looks like that. If we break to the downside, we're going to move very quickly from 47.70 to 47.40. There's nothing there, right? We're going to fall right through that level very quickly, or we are likely to fall through that level very quickly, right? Because I don't know. You don't know. I don't know. There's no volume nodes there. So it's very likely that we would just dump right through that very quickly. Should we break to the upside, then we will resolve the Globex high, which coincidentally is yesterday's open. Imagine that. One of those institutional pivot points. Then we will deal with yesterday's high, which was very close to the Globex high. The intraday and the Globex high, very close together. We're flat on the morning. We've gone nowhere, and we have an ADR of 1.6. So, this has the potential to make a 1.6% move. It's unlikely to do that at this point. We've already gone 12 hours through the trading session, but a 1% move is not at a line. So from our current location, if we was to measure a 1% move, well, there's half of a percent, and that would get us to 48.05. There's a cog line at 48.11. And cog lines, guys, I continue to get this question. They're only on the ES and they're only on 11s. You don't need an indicator. It is 48.11, 47.11, 46.11, 45.11, 49.11, 11.11, 11, 11, 11. That's a cog line only on the ES. It doesn't exist anywhere else. And they're not John Euler's cog lines, right? The person that named them must have apparently not realized that John Euler had already created something called cog lines. So if you were to go search for cog lines, you'll find indicators and you'll find stuff developed by John Euler's. That's not what we're talking about. ES, COG, center of gravity, cog line, 48.11. I took that half of a percent move and doubled it. So there's a 1% move, 48.30. A 1% move would not be out of line, right? We could easily attain a 1% move, but it will not be subtle or sneaky and it won't be a slow grind. If we make a 1% move today, you will know it. AD, tick trend, advanced decline, market breadth, UVOL, DVOL, it'll all be lit up like a Christmas tree. Everything out there will be running. And it will take at least two sectors. Energy doesn't really come into play on things like this as much as it used to, but I don't sleep on energy, right? I see a lot of people kind of poo poo the idea that energy doesn't have the weight that it used to have. And I can agree, it doesn't have the weight that it used to have, but it still is impactful. But for a move like that today, it's definitely going to be, just tech, just finance. And if you put tech and finance together moving in the same direction, then you're really going to see some fireworks, right? That is going to be the catalyst to really get us going. And we've got plenty of names on the book docket, right? 8:30, 10, 10:30, 11:30, and 1. So plenty of opportunities for this to get up and go. On the other side of that, it's got plenty of opportunities to stay stagnant and stuck in the middle of that range, right? If these numbers are in any way confusing or doubtful, and they have to call the nerds and say, "Hey, the numbers came out. I don't quite understand. What do we do?" And then the nerds, of course, are going to tell them, "Yeah, give me time. I got to crunch the numbers. I'll get back to you." And then the market doesn't do anything. It's just sitting there waiting on the nerds. So upside move, downside move, and or sideways. And I would not be surprised if we just stay sideways. Jump over to the NASDAQ real quick. All right. So from here, we've got the NASDAQ. Same thing, consolidation inside of the range. We're hanging out at the roundy, 16,500. We're underneath the moving averages again, so a little bit of bearish connotation. Should we make a move to the upside, we will resolve the roundy, deal with yesterday's high, and we've got an ADR of 2%. Well, we're basically flat on the day. So if we were to add 2% to this, and I find it very unlikely at this point, since we're already 12 hours into the day, there's a 1% move, which would get us outside of the box and get us to that 16.7 roundy. A 2% move would get us to 850. I don't see that. I just really don't see it. It can happen, right? We never want to say that it can't happen, but 16.7 would be my target on the day if we did turn bullish. We've got a lot of struggle to get through. Globex high, uh, Monday's high, yesterday's high. All of those would need to be resolved before we could hit that 16.7. And each one of those would be first test plays, soft rejections, opportunities for a good 25 points and get your day done. Should things turn negative and we head to the downside, we would resolve that area very quickly. So if we break below 465, then we're very, very likely going to go to 365. That 100-point move in the very, very quickly, right? There's no volume nodes there, nothing to catch us on the move down. So that covers the two futures. We'll go ahead and bring in, the grid as I normally do. The dollar, the thing's been making moves, and it was pretty exuberant yesterday, shocking in its movements. We need these things to settle down. It won't matter what you want to trade, whether it's Tesla or Apple or whatever. You get the impact of the dollar and the bonds coming into that, and it all just goes right out the window. So keep your eye on the dollar and the bonds. I was reading a really good article this morning on the dollar and how a lot of institutions are looking for a strong dollar in 2022 until the Fed starts liftoff, right? And then they're talking about how it's liable to struggle at that point. So they're already pricing in, right, across the board. They're pricing in those hikes, and they said a lot of it already has been priced in. So we want to keep our eye on this and look for correlation. So when you do see the dollar make an exaggerated move like this, you immediately want to look at the VIX and see if they are in a similar setup, similar pattern, because that will tell you a lot about global stance. The fact that there is no correlation here uh, tells us that there's no fear in the global market being used as a hedge, right? They're not buying the dollar like we would buy the VIX, but they do when things get nasty out there. Omicron is still front and center. They're talking about it everywhere. Um, and yet companies continue to come out with forward guidance, implying that they're putting out statements that they're easily going to make their targets and even upping their targets. So strong earnings just means strong marketplace, right? We're just going to keep going up. So watch the dollar, watch the bonds. Be aware when these things start making an exaggerated move, because it can provide some caution, right? It can at least give you a little bit of a heads up and say, I need to approach this next piece with caution. All right. The EV market, since it happens to be the watch list that I already had up, you can see that, Ride, GM, Tesla, BYD, they're up this morning, not amazingly well. Compared to where Tesla has been in the last few days, the fact that it's only up, less than 1% says quite a bit. You can see how yesterday was that red day, and I like a red to green play. It would have been better if Tesla had closed in the lower portion of yesterday's candle. That's how I like my red to green setup better. But we had that very beautiful failed flag setup on Tesla, and then it failed, right? The failed flag failed. Hey, like that one. So a typical failed flag play is that we have, a good clean move to the downside. It starts to build that basing pattern, and then we get that break up, right? And then we get the Busby, of course, and a continuation. We call it the reciprocation play. We back up to our previous levels. From that basing pattern, that's our opportunity, right? It gets down there, it bases, we get that breakout. You could trade the breakout, you could trade the Busby, you could even trade the breakout from the Busby because you've got a clear destination of where you're headed. So we started to have that yesterday, right? And it can be an elongated base, it could be a V bottom, it could be an angled channel in either direction, or it could be a bear pennant. Yesterday we had that bear pennant forming on Tesla. Right, had that deep, clean move to the downside, and then a lot of consolidation here, compression, 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 breakout, no follow through. Right, we had all that compression, all that winding up, more and more and more energy. We got the explosion, got the move that we were looking for, and it did not reciprocate back up like it should have. So our failed flag setup failed. This gap up this morning put us right back into the same trash from the last 2 days. These are institutional pivot points. We failed to set a new high in the Globex from the previous high of Globex, and we failed to reach Monday's high. This exuberance from the 4 a.m. open seems to be nothing more than a lot of positioning, and it's just fading right back off again. What you'll often see when a market makes an exaggerated move is that it hits the reset button. So, it gapped up from 93 to a 103 or oh 03, and then went another 10 beyond that. So it really just looks like it's resetting. Once it comes down and resets, if this bullish play is still alive, then we will see that come right back up again. But if that bullish play was firing of all of the cannons and that's all there is to it, then that's the last of it you're going to see, and it's going to continue to fade down and test these previous levels. We see that move a lot in the kill zone, right? Between 2 and 4 in the morning. But here's a more muted example of what I was just talking about. Gap up in the pre-market, nice little rally. It wants a reset, so it fades back down, closes, quote, quote, closes the gap, and then continues on with its bullish exuberance. Now, this is a much smaller version of what we just looked at, but same rules apply, right? History doesn't repeat itself, but it sure does rhyme. A lot of the other legacy names out there, like GM, Ford, they're getting some go. There's a red to green candle setup that I'd really like to see. Notice GM closed in the lower portion of that red day, but we need the follow through, right? So the reason that red to green is so great is it needs to rally up first, at least above the open of the previous day and or above the entire previous day combined. So if we get something like that, I'm going to be a lot more excited about GM. The fact that we're getting that set up, is got a lot of opportunity. I like that trade setup. When it's a very small candle like yesterday, you can see the body of that hammer is way down here at the very bottom. Well, that doesn't really kind of fit into what we're talking about, right? A good red to green, when, I mean, that's not a great one either. But you can see how we closed down here and we were getting ready to open up here, right? If you look up red to green, you'll find it's a great trade strategy. It can be used on multiple time frames, but I like the daily. And then I like to put that red to green into context, trend line breakover, inside day, something, right? Something more than just, oh, I had a red candle yesterday and I'm seeing a gap up in the pre-market today. Because if that's the only thing on your criteria, you'll end up with a massive watch list at the bell. Can't trade all that. Can't even watch all that. Too many names. You can see the sectors are really kind of flat this morning too. They are up, more than a quarter, a couple of these, but a quarter is nothing. I want to see it at least half or better, a half of a percent, and we don't have that. Airlines yesterday were actually making some moves. I was surprised. Today, of course, they're not. You see how we're kind of stuck in that indecision area. Look at the long wicks across that bottom. So, good moves yesterday. We're off those highs today. Energy's moving around. It's not the big tech names, right? I mean, tech is up slightly with the Qs. Finance is up slightly. And like I said it earlier, we need finance or tech. It's got to be one of those if it's going to carry us. Market breadth suggests, and we've seen it in the last few days, out of the S&P 500, we've been holding above 300 names. It's been 350, 375, 400 names. Even yesterday, we were hitting 400 names, and we stayed in between the 350s and the 400s. What did it get us, though? Right? And why? Well, because it's all those names that are moving, right? Here's the advancing issues of the S&P. It's all those companies out there other than tech, other than the mega caps that were making a move yesterday. And so sure, we were looking at this and saying, "Oh, wow, 325 names in the S&P are advancing. Why are we still going sideways?" Well, because we didn't have that push with tech and or finance. And that's what we need. Right? It just shows that the mega cap companies really do drive the market. Those five names are the only five that you need. Just kidding. We need all of them. So on a day like this where we can't lean on the sectors, we will have to use use our watch list, use our scanners. On days like this is where I say we really have to be stock pickers. Right? We have to go in and let our watch lists and scanners lead the way because the sectors will not be able to do it for us. I know this is where so many people get hung up. How do I set my scanner? What should it be focused on? What are the nuanced parts and pieces of that scanner that make it a good scanner? I've never liked the idea of using a scanner to bring me things to trade, especially a free scanner, right? You get what you pay for, and Thinkorswim is a free product. It cannot compete with things that you pay for. Paid for scanners are going to kick this thing all day long. But I don't want a scanner to bring me something. It will never be fast enough. And even when it does bring it, then I still got to evaluate it. And if you make it too strict, it will eliminate really good stuff that you would have wanted to trade if you had seen it. And if you don't make it strict enough, it's going to overwhelm you with stuff and then you can't go through them all, right? It'll just be too much. So it's that very thin, touchy line of what's the best scanner out there. So instead of approaching it from that point of view, I instead decided, what do I do not want to trade, right? Let's just start with that. I'm an options trader. I want to trade options during the day. What would I not trade? Well, I wouldn't day trade a market option if it doesn't at least have weeklies. So notice how I got to this point. Scan in, you click the button, go to public. They're alphabetized. We want W's, so it's the last public name on the list. I want to look at any companies that have weekly options. Companies earn the right to have weekly options. If it doesn't have that, then they're so illiquid, they haven't even earned the right to have weeklies. Now I can eliminate everything else in this scanner and just hit scan. And I got 621 names because out of the entirety of the marketplace, there are only 621 things that have weekly options. Well, sectors are a great thing to evaluate ETFs, but other than a very few like SPY, QQQ, other than a very few of those, most of them don't move enough for me to want to day trade, right? So I'm going to exclude all ETFs. I don't need this thing to tell me about SPY and the QQQ anyways, right? So we just eliminate that. Now we've got 526 names. So we knocked 100 names right off of it, right? And we also got rid of like double leveraged, triple leveraged products. 526 names, that's a lot of names. But Thinkorswim has this built-in thing in their watch lists called the high-low graph. And I did a video on this, so you'll be able to find it on the Bullish Bears. This high-low graph, you can just search for high, you'll see it, high-low graph. You can go in and change the time frame, but you don't ever need to. It works just fine on a daily. This thing is phenomenal on an intraday basis. You put that thing on, and you will find advancing new highs, breakouts all day long, everything on the list. And what I do is I apply it to this. Right? I apply it to these weekly options because we got 526 names left. I only want to see the names with a high, high, low. Right? That's a lot of high, 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 low. In the video that I made that I put on YouTube, I shared a scan setup where I took the code out of this thing, and you can see it's a very low amount of code. I took the code out of it and I made a scanner from it, and I applied that to the weekly options. And what you get is about 8 names almost all day long, nothing less than, say, 5 names all day long that are either testing new highs, getting ready for a breakout, getting flow up into a resistance zone, just ready to go. Primed names again and again and again all day. It doesn't stop. It's amazing. It's simple, it's free, it's easy, and you can apply it to whatever you want. Now, Thinkorswim does have that watch list for weeklies right there. The problem is we already know there's 600 and something companies there. So if I hit weeklies, it's very likely going to give me a customize error, right? It's saying, hey, you've exceeded your allotted amount of scripts because there's just too many names. So we can't do it that way. But what we can do is steal the code out of there, stick it in a scanner, apply that to the weekly options, and then what's left is a very small amount, right? And like I said, I've got the videos. I've even built the scanner and shared it. I made a very tight one at a 90 because this thing, the high low goes from a -1 to a 1. -1 is the most extreme negative moves. 1 is the most extreme positive moves. I set it at a 90, and then I made another one that was lower at like a 75 or an 80. That way I could see things that were starting to get extreme before they actually hit extreme status, right? That's what I got for you guys. Be careful, be safe. I will be streaming in the Bullish Bears this morning in the large caps trader room, and I look forward to seeing you all there.